Hey, welcome back, everybody, to Telemedicine Talks. Today, we have a treat. In addition to my awesome co host, Phoebe, we have Jamie Fleischner from Set for Life Insurance. Now, I think this is an important topic for us to talk to. And when it comes to telemedicine, in terms of when doctors become their own businesses, right? And that's what we see in telemedicine nowadays. Now, Jamie is well experienced in insurance. Her specialty is disability insurance and also life insurance. Been doing this for 32 years and is focusing on independents, really physicians, high income earners. And again, the company is Set for Life Insurance. So, welcome. Thank you for gracing us with your presence and talking to us about, I think, this super important topic because a lot of doctors, when they make the switch, right, don't know anything about this. A lot of us come out of residency and we are set. There's a pathway. There's a tunnel that we go down and everything's set for us. Most of us go into W-2s and we just sign on. I remember just signing on the line. I'm like, oh, great. I have insurance. I'm just going to check everything off. I asked my HR lady, hey, what should I sign this one too? What should I max out? And I asked my mom. My mom worked HR. Just do everything. And that was it. That was the extent of my knowledge. So thank you for coming on the podcast and educating us on what we need to prepare ourselves for. Phoebe?
Well, thanks for having me.
Yeah,
So
no
I think you
problem. No
bring up a
problem.
really good point. So I think most people, when they finish up their residency, they go into a career and they assume they're just going to stay on that path and that their employer is going to take care of them. So they really don't pay attention to insurance or any of this kind of stuff. But one of the most important types of insurance, especially for physicians, is disability insurance because it covers your income. Your income is your most valuable asset. So your most valuable asset is your ability to earn an income. So every financial decision you're going to make throughout your entire career is dependent on the fact that you're going to produce an income and you're going to have this income flowing in to save for retirement, to buy your house, to pay your bills, etc. If something happens, you get sick or injured and that income stream stops, where's that income going to come from? So again, a lot of people rely on their employers and there are some policies there and there's some drawbacks and we can talk about that too. But when you make the decision to go out on your own, all of a sudden you lose a lot of those types of policies. And so all of a sudden you're back to square one saying, now I'm on my own. I'm flying by myself. If something happens, if I become sick or injured, how am I going to pay my bills? How am I going to pay my student loans, my mortgage, et cetera? And that's where it becomes really important.
Yeah. And I think one thing that I thought was really interesting too is I think that it's almost an afterthought. So a lot of physicians that I consult for, when I bring this up, what are your plans for insurance? What are you going to do post W-2? They actually didn't think about it because, again, to your point, Jamie, a lot of this is just taken care of for them. And so they don't even know what questions to ask. They don't know what policies to look for. They don't know what makes normal sense versus what doesn't make sense. I think it's awesome to have somebody of your expertise like here who's going to be able to share some of those like little nuggets of information just so, they can make sure that they're getting the right policy, they're asking the right questions, and they have all their bases covered.
Exactly. One of the first pieces of advice I would give for somebody who is considering going from being a W-2 employee to a 1099, it's easier to get the insurance while you're still a W-2 employee because you can have that income verification. So when you apply for disability insurance, you can't just go out and apply and say, I want $10,000 a month because that's how much I want. You have to qualify for it. And in order to qualify, you have to have some kind of income verification. So when you're a W-2 employee, you can just show a pay stub and say, hey, I'm earning X amount. And they'll allow you to get that policy. Even if you have a group policy, there's always room to supplement. So they'll still allow you to get some, maybe it's a lesser amount. Then when you leave and you go out on your own, your individual policy is always portable. It'll go with you and it'll grow with you. Now, if you go out on your own and now your income is, maybe it's lower, you can still maintain that premium and your policy will still pay. And then as your income increases, you can then adjust it accordingly. Typically, you need to have about a year of income pattern, though, to be able to increase that policy. So that's why it's critical. If you're thinking about going out on your own, get your policy first. If you're newly out on your own, you might have to wait a year to actually apply for a policy.
And let's say you don't wait, or let's say you do wait and you make that mistake. Now, what's in terms of monetary kind of consequences, what happens? Are you stuck with one, you potentially can't create a policy, right? Or if you can't, is it a lower policy set number and then you have to build that up? Because
Well,
this
you
is
need
really
to
interesting.
show,
I
you
never
have
thought
to
about
show the income pattern. So if you are on your own, let's say you go out on your own, you talk to Phoebe and she says, yeah, you need to go out and get a disability policy. You're 3 months out on your own. You may not even have an income pattern yet. And so they might say, just wait till you have that income
Got it.
pattern, circle back with us at 6 months, 9 months, once you've had a year to show that income. So you really do have to wait until you can show that. Now, let's say your
Wow.
income fluctuates. Let's say it goes up and down. One year you have a great year, the next year it's down. You don't have
Mhm.
to keep telling the insurance company what your income is year to year. So once you get your policy, as long as you pay those premiums, if you go out on claim, you might get paid more than you were or less, depending on where you are, but you don't have to keep adjusting it necessarily.
Got it. Got it. And so in that time, let's say you do make that mistake too, in that time frame where if you do have to wait, so you're just flying without coverage, right? So if you go down, then that's it. And that's a scary part.
You better hope you have some good savings. Yeah, just to
So,
carry you. Yeah. And if you do leave, you also can't take that group policy with you. So when you're when you're a W-2 employee, you have a group policy. And so the group policy is generic. It covers everybody. So it says if you're totally disabled, not working, most group policies will pay you 60% of your income up to a maximum, usually 10,000, 15, and that's taxable. So a couple of things and how it relates to your audience. Number one, you really have to be totally disabled. It's not necessarily going to cover you if, let's say, there's somebody who's doing procedures. Maybe they're interventional cardiologist or gastroenterologist or a surgeon, and something happens and they can't do those procedures. The group policy might pay so long as they're not working. If they decide to pivot and do telemedicine and earn an income, that group policy probably won't continue to pay them because they're
mm,
actively earning an income. So group policies will require you to be totally disabled. Now, an individual policy, if you have an individual policy on top of your group or you're out on your own, you have something called own occupation. So in those circumstances, something happens and you can't do procedures, it's going to pay you your benefit, even if you can pivot and go do telemedicine. So you're not using your hands. You
that's
could just use your voice and do your telemedicine. Anything you earn doing telemedicine will not offset any benefits that you're getting. So it makes a really big difference.
now begs the question. So when you set up this individual policy from the group policy, and let's say you're not making as much as telemedicine, does this individual policy, is that based out of how much you're making separate from the group policy, or is it just combined all in together?
So when you apply for a policy, they look at where you are at the time of application. So if you're a W-2 employee, say you're making $300,000 and you have a
Mhm.
group policy that pays you 10,000, they might let you get another 5 or 10,000, whatever that amount is. So there's only a limit on how much you can get based on your income and any other benefits you have in force. Then when you leave, that individual policy can become portable. You can buy more on your own because you don't have that group policy to offset it. So as an individual, you can buy more. But again, once you pivot, if you don't have that income stream yet, you might have to wait a little bit until you have that pattern to increase it.
Now, is there a fear that the insurance company will say, "Oh no, now your income's decreased, but now your policy's less," or yeah, I
They
don't know
can't
if you've
do
covered
that.
this already.
So there's language in the
Oh,
contract that they cannot do that. So there's two things that are built into, if you have a good contract. One is called non-cancelable guaranteed renewable. It's non-cancelable and guaranteed renewable. And in English, what that means is once you have your policy, they can't modify or change your contract. So they can't come back and say, oh, you're earning less. You need to reduce it. They can't do that. They can't say, oh, you just took up jumping out of airplanes. We're not going to cover that. They cannot modify your contract. They can't say, oh, we heard you had back surgery, we're going to exclude it. They can't change your contract, and they also can't change the premium. So it's really important you have those clauses in your policy so they can't modify it. And I have had clients who are W-2 employees. They get a decent sized policy and then they start their own practice, whether it's telemedicine or even a private practice. And the first couple of years, they're not earning as much because they're building and they've gone out on claim. So because they paid the premiums for that full amount, they actually got paid the full benefit because they were paying the premiums.
wow.
The company couldn't force them to reduce that.
No, that's interesting. That's interesting. And let's say a lot of our members or a lot of our listeners are actually looking to pivot and get out of their brick and mortar, their known W-2s altogether. What's a time frame that they should be thinking about this? Sometimes this comes quick, right? For me, it took me a year. I was supposed to be doing this for a year or two, and it took me 6-8 months to get out. So when's a good time to start thinking about this?
The earlier, the better. The earlier you can buy a policy, the better, because everything's based on your age at the time of application and your circumstances. So if at the time of application, you're healthy, you're W-2, and maybe you haven't had your birthday for the year yet, get your policy as early as you can. Because once you have that birthday, the premiums go up a little bit. So everything's based on where you are at the time of application. Even if you're thinking next month, you're going to go out on your own. On the application, as of today, I'm a W-2 employee. Here's my pay stub, and they'll let you get that policy based on that criteria. Then the policy goes with you. And if you go on claim, it pays you based on where you are at the time of claim. Now, something else to consider too is based on what we're talking about. Let's say when you buy the policy, you're doing internal medicine, but then down the road, now you're doing all telemedicine. It'll cover you in that capacity. So a lot of people would say, I'm not able to do internal medicine anymore. The company might say, but wait, you're doing telemedicine. So something would have to happen where you can't do telemedicine anymore. Does that make sense? So if, let's say, maybe you have you're immunosuppressed and you can't go into the hospital now, but you haven't been going into the hospital, you can't necessarily file a claim and say, oh, I'm immunosuppressed, I can't go see patients. They're going to look at it and say, the last 2 years, you haven't seen people in person. That doesn't necessarily qualify you for that.
That makes sense.
Yeah.
Yeah. And Phoebe, are there common questions that you run into as well when you talk to the doctors or even startups that you found that you have hard to answer?
I think a lot of people are just wondering, like, when is the right time to do it? Of course, the question is like, what is an average cost? Like, how can I tell if it's a good policy or one that is like way over the top? Typical, what are some key benefits that I would want to make sure that my policy includes versus maybe some that are a little bit more nice to have, like stipulations. So I think those are like the top 3 buckets of questions that I'm getting. And I know that now I can at least tell them, like, you want to do it while you still have a W-2 job, because I didn't know the answer to that.
Yeah, well, that's huge.
So that brings up a good point. So a lot of our clients, they come to us and we work as an independent broker. So what that means is we don't work for any insurance companies. So we can spreadsheet all of the available options. And so we listen to our clients and find out what's the most important thing to them. Some people want the most comprehensive policy. Some people might just say, I'm 50. I just want to get through the next 5 years. I just need a baseline policy. And there's everything in between. So we listen to what they need. The younger you are, the less expensive it is. It's also more expensive for women by about 50%. It's a lot more expensive for women than it is for men. So we're just more likely to go on claim. Our life insurance is less expensive, but our disability insurance is more, just based on risk. So that's something to consider. So if you buy your policy, and I'll just give you a rule of thumb, in your 30s, expect to pay between 1% and 3% of your overall income. And that'll cover about 80% of your income. You can never, or it'll cover 60% of your gross or about 80% of your take home pay. You can never 100% cover your income. That's just the way that they do it. So the older you are, the higher, it's going to be. So it really depends. It also depends on your medical specialty. So if you're doing internal medicine or telemedicine, that's considered lower risk than if you're doing emergency medicine or surgery. Those are considered higher risk, so they're more expensive. And then they also look at where you're located. So it's more expensive if you're in California than I'm in Colorado, So they just look at all of those type of factors. But I think the best thing to do is you contact a broker and just give them your criteria, your information. This is what's important to me. Spreadsheet it out and look at that and then decide which is going to be the best policy and just have somebody advise you and go through that process with you.
Nice. Now, what are some pitfalls that you've seen when you're working with physicians that approach this subject? Common mistakes, what to look out for, things that they're like, oh no, you definitely need to consider this when you do this process.
So I think one of the biggest pitfalls that I actually think is people assuming that their employer is going to take care of them. So they just think, hey, I don't really need this. I'm going to go work at this big hospital or this big physician group. My employer will take care of me. And I think it comes to as a big surprise as people realize that they think of you as just, they can get rid of you at any time, or when you leave, you lose your benefits. The other thing is, if you do have a disability while you are employed, you sometimes, they categorize you differently, and all of a sudden you lose your health insurance and you might lose your life insurance and some of these other types of things. So people don't think about that. And a lot of people just also procrastinate. They just think, I'll do this later, or I really don't need to do this, or it's not going to happen to me. Maybe someday if I'm on my own, I'll get this, but right now my employer's going to take care of me. So a lot of people just kick the can and deal with it later. The other thing that you have to think about is, in order to get a policy, not only do you have to qualify financially that we talked about, but you also have to qualify medically. And so about 1 in 3 applications we either get turned down or some kind of exclusion for your left knee or your back or mental health or any of these types of things. So they only ask you medical questions when you first get your policy. So they comb through everything. And so anytime you've had any kind of treatment for anything, they will look at it and analyze that. But once you get your policy, you'll never have to answer those medical questions again. You can increase down the road by just showing your income has gone up. So I think another misconception is people think, well, I'll just go buy this when I need it. And they don't realize that trip to the chiropractor, all of a sudden now there's a back exclusion, or they went and saw a psychologist, they were going through some tough times, a bad breakup, and now they have an exclusion. Like, it's really frustrating. So the earlier you can get a policy and go through that process and avoid that in the future, the better.
Now, this pertains to a very small subset of kind of telemedicine doctors, and it's really specialized, but I'm former military, right? And before I separated, there's a VA process, and you go through your disability claim, so forth and so on. And there's a few of us, especially in our community, that are active duty right now and are thinking about transitioning. Do you want to do your VA disability process before or after? Or is that going to affect kind of your medical?
So yeah, I actually get this question more often than you would think. There's one company, Mass Mutual, that will allow military physicians to get a policy, but it's only $2,000 a month with $4,000 of increase options. So they'll only pre-approve you up to $6,000. It's not a lot. So if maybe you're still in residency and you have several years to go and you say, I just want to have some kind of coverage, you can get that coverage. If you're right on the brink of finishing up, I'd just say wait until you're done. And then once you're no longer active military, you're going to have all the options available to you. And then you can shop it around and you can get more insurance. But yeah, they make you go through that process and the whole disability. But that's not a problem in order to get the insurance, though. If you're still healthy, unless you're being treated for something significant, it shouldn't be a problem to get a policy.
And specifically the VA rating. So do they look at your VA ratings as well as part of the whole medical picture?
So I just had somebody come out. Yeah. So I just had somebody come out of military training, and they got a policy, and they had to turn in some kind of VA disability form that said all of the different things. So they turned that in, but the company still came back and said, no problem. Thanks for the disclosure. And they offered them a full policy. So I think it depends on what's on that form. Obviously, if you're being treated for let's say you're being treated for, like I said, a knee surgery or something. Yeah. They would just consider that just like anybody else with a knee surgery, and they would just exclude that. And if they exclude it, they might say, once you've been treatment free for 3 years or 5 years or whatever the extent of the injury was, then they would reconsider that exclusion. But those are good questions. And those are the kinds of things. Contact me and I can look at that specific thing and advise you.
Yeah, no, because we don't think about these nuances. This specific situation, I personally waited to get VA rated before, or I waited after to get I specifically waited to get my VA rating after I got my disability, so forth and so on. So I didn't have to deal with that. But no, a lot of us don't think about this. So yeah, definitely sooner the better. So how do we approach this? What do we need to prepare for before we talk to somebody like you? We jump on the website, setforlifeinsurance.com, and we're like, okay, I'm interested in getting this. It's important to me a lot before I transition out of my brick and mortar. What do I need to prepare? What should I get? How do I hit the ground running when I talk to you?
So a lot of people just come through our website, click on request a quote, and give us the basic information. And that's enough to just start the process. And then we shop it around and show some initial recommendations. And then sometimes we set up either a Zoom call or a phone call and go over all of that. That's at least enough information to start the process and see what people are looking for. If there's a lot of extenuating circumstances or people have a lot of questions, people also just go on our calendar and set up a time and go over it. Because it can be overwhelming, and it can also be a very simple process too, just depending on the circumstances. So people have very specific circumstances or maybe medical history or something they want to talk about. They can also just set up a time to go over it. If it's more just simple or traditional process, then they can just request a quote. And that's generally enough information for us to at least prepare a comparison and make some recommendations.
Got it. Got it. And what's the time frame from start to finish? Should we expect something like this happen on
3 to
average, right?
6
Let's
weeks.
say,
Yeah. 3 to 6 weeks. Longer if they need to request medical records, even longer if they need military records, as you probably are aware. And some like university hospitals can take a really long time to get those records, but at 3 to 6 weeks on the lower end, if it's, that you don't have a lot of medical history, you haven't been treated for anything, it just goes really smoothly. To if you have a great deal of medical history, that's what usually drags the process along. If you apply for more than $10,000 a month benefit, they'll also require a blood and urine test. So where somebody comes out and draws blood and urine. So if you apply for less than 5,000 or less than 10,000 a month, or if you're a medical resident, they just waive that, or you're coming out of residency, they'll waive that.
That's interesting. I was expecting a lot more than 3 to 6 weeks, to be honest. So
Some
that's
are
amazing.
longer if we need a lot of records, but that's just the typical on average. Yeah.
Yeah. No, a lot of the folks getting into our listeners, so forth, or our cohort are the people that have been in for a little bit and thinking about something new. So we may be a little bit down the road. Yeah, I'm definitely an old man, so I have a lot of stuff. Thank God I started this process way before I started racking up all the medical concerns. But yeah, no. And now, do you have any other questions, Phoebe? Anything else that's come up in your line of work?
No, the only other question I would say is you brought up like some medical exclusions, and for people that might maybe avoid this because they're like, oh, I did have back surgery and I did have something happen, maybe some like words to those folks, that kind of bucket, just because again, like I'm sure that you could still probably find them a policy even if they do have medical exclusions. It's just a little bit different of a process.
Yeah. So usually if you get a medical exclusion, let's say they exclude your back or your knee or your elbow or whatever it is, they usually don't raise the price. They just won't cover that specific thing. And so some people are like, I'm not going to get a policy if it's not going to cover my knee. But you also have to think about all the other things that could happen, cancer or other types of things that can occur. We weigh it out, but so you have to weigh out the pros and cons of taking a policy that has an exclusion. And yeah, you do get to a certain age where people do start to have their bodies start to break down or whatever. But you have to, again, weigh it out and say, okay, but if I don't have a policy, do I have enough in savings to cover my expenses if something does happen? So sometimes something is better than nothing. If people do have significant history, we do also have non-traditional carriers like Lloyd's of London or some of those where we can go and find policies that'll cover them. Maybe they're diabetic or they have some pretty significant health history. We can still typically find something for them.
Got it. Got it. And is there any concern, let's say you do develop something, or let's say you hold off on your surgery and you get your policy and then you have the surgery a month later? You said that they can't take anything back, but in those circumstances, where
there is something on the policy called a 2-year period of incontestability. So when you file an application, they will ask you, do you have any upcoming surgeries or have you had any history? Yeah. And if you have a claim in the first 2 years, they have the right to investigate. So if they knew that you got your policy and you were already scheduled for a surgery, they're probably not going to cover that. So you have to be careful on that because they can just rescind the contract. I've had people who get a policy and then 6 months later they get into an accident. They'll still look through everything. Obviously, they didn't anticipate that. So you do have to be careful of that. So you do want to make sure you disclose it, because if you don't, and then you go have that surgery and file a claim, they might be able to prove that you already had that as a pre-existing condition and they wouldn't have covered that.
Got it. No, super important. Well, now I know we're coming up on time, but I always love asking this question. What are things that you found that a lot of doctors don't know to ask? What don't we know usually that we need to know?
Well, one of the things a lot of people ask is, how much should I get? It's just like anything else. And I think people also need to assess their own personal situation to figure out if something happens, how much you need to have. So it's almost like asking a realtor, what kind of house should I get? Well, it depends on what you want. What are your needs? How many bedrooms do you need? And what's your budget? And it's the same for disability insurance. So you want to look at, what does your household look like? Are there two people that bring in an income, or maybe it's just one? What are your expenses? Some people live to the full extent of their income. They have a lot of loans or a lot of expenses, and some people live well below their means. So I think you also need to assess how much you really need to have. And what Phoebe had said before too is, you don't always need every bell and whistle on your policy either. Maybe you don't need all of the features, again, like the house or a car analogy. What are the most important things for you? So I think, but the biggest question, a lot of people are like, I don't know where to start and I don't know how much I should get. And I think you have to look at your own situations and look at your own budget and say, okay, if something happens to me, here's how much I need to be able to pay my bills. And then that's the best starting place.
And I'm sure you and your team are well adept into walking somebody like me that definitely has that question, right? Through that process and getting through. So that's
Absolutely.
awesome. That's awesome. Now, any closing thoughts? Any closing drop the mic kind of statements?
No, I don't think so. If somebody already has a policy or they got it a long time ago and they're saying, did I get the right kind? Or I haven't really reviewed it, or I bought a policy and I never heard from my agent or broker ever. So they can come to me. I'm happy to talk them through it and walk them through. And one other thing that I do like to emphasize is it's not only important to get a policy, but it's also important to review it as things change. So you might have people who bought a policy maybe during residency, and now, 10 years later, they're going into telemedicine. They might need to adjust their current policy. Maybe they already have something, but they don't even know what to do with it. So it's really important to review things as your circumstances change. So I say every probably 3 years to reevaluate your policy, just to make sure it's doing what it needs to do, or any kind of life change, job change, you get married, you get divorced, you have a child, or buy a house, or any kind of big shift in any kind of life changes. You want to just make sure that your insurance is up to speed, because what you don't want to have happen is you get a policy and you forget about it. 5, 7, 10 years later, you have a claim, and then you say, oh my God, I can't even remember if I'm covered. Am I going to be okay? Am I going to be able to sustain my household? So it's really important to keep it up to date.
So that's something else I need to put on my to-do list then. I'm probably like 10 years late on that. Oh, geez. Well, no, thank you so much. So this is Jamie Fleischner. Thank you for joining us on Telemedicine Talks. Other than looking you up on setforlifeinsurance.com, is there a better way to contact you, or is that the preferred way?
That's the best way. We have a contact form. We have a quote request form. We have a calendar link. Everything's on our website.
Awesome. Awesome. And we'll include your website to link it to our website as well. And so if anybody has any questions, concerns, also any specific questions, concerns for myself, Phoebe, definitely drop us a line at Phoebe at Telemedicine Talks or telemedicinetalks.com or Leo at telemedicinetalks.com. Well, awesome, Jamie. Thank you so much for taking your time. This has been enlightening, really, because again, this is something that's just really not a big issue until it becomes one. And it's a scary thing when people do make that jump from a W-2 to their own. That happens a lot in telemedicine. So thank you so much for your time. I appreciate it.
Thanks for having me. I appreciate it.
Awesome.